Welcome to ISE's ETF and Index Weekly Outlook, a weekly outlook on ETFs and ISE's indexes, hosted by Patrick Ceresna, the Chief Derivative Market Strategist at OptionSource.net. ISE has a portfolio of more than 20 proprietary indexes based on a diverse range of fast-growing industries and emerging markets. Our team of indexing experts is dedicated to creating these innovative indexes and partnering with issuers to launch unique investment vehicles. This includes exchange-traded funds, exchange-traded notes, and other structured products. ISE continually enhances its trading platform and develops new index products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE ETF and Index Outlook for February 27, 2012. This is Patrick Ceresna. As always, we start off with a chart of the S&P 500 using that SPDR exchange traded fund symbol SPY. We now have a market that has gone a solid 2 months of straight line rallying higher and has reached some substantial overhead resistance levels up around the 136 to 138 level. We do believe, even though it has not begun yet, that market corrective pattern will begin somewhere off these levels. There certainly is room for there to always be one little spurt higher based on some short-term news that pops, let's say 138 or 139, but we believe any upside breakout will be short-lived before a corrective or profit-taking cycle begins. We do not believe any profit-taking cycle will be a substantial crash of any sort. It will probably end up being about 4 to 8 S&P spider points lower, as we probably may see tests down into the 134, 132, maybe even the 130 level if the profit taking is robust before the next buying opportunity for the S&P 500. Now, last week we featured the ISE Global Platinum Index Fund, and we were suggesting that was going to go higher, as well as the ISE Natural Gas Index and the Global Engineering and Construction Index. All three of them actually bullishly broke out that the way we were anticipating to their overhead targets. And so this week we wanted to highlight the ISE Global Wind Index, which is symbol GWE. The ETF products trade under the symbol FAN. We more or less had this little flagging formation and the subsequent attempt to break out here on the upside of the wind index, which has been quite oversold and has certainly not in any way rebounded like the broader markets. We're really at a line in the sand here. Either this breakout attempt here will fail right now, or we're going to have a break to a higher high. If anyone sees any follow through above the 97 level on this index, it may indicate that it is ready for to finish a move all the way back to the highs of October and August, which lie around the 104 to 106 level on the upside. Next, I wanted to just highlight the ISE Water Index, which is the symbol HHO. The ETF product on that one trades as the FIW. We more or less at this stage have this approaching its July and August highs of last year. More importantly, in the last 2-3 weeks, every time the water index has attempted to rally toward its highs, it almost immediately was brought about a wave of distribution. This is very heavy for that index along these tops. It is an increasing likelihood that with the broader markets at some stage beginning that corrective pattern, we should see a wave of selling come in here. This water index could very easily drop back down toward the 90 level, or even as low as the 86 level for a direct retest of that focal point below. But at that stage, that will probably be an opportunity to accumulate the water index, as we probably don't believe a major top is in yet, and that would simply just be a buying opportunity. Finally, I wanted to highlight the ISE Chindia Index, which is the ICK. The ETF product trades under the symbol FNI, and more or less we've seen this index rally substantially toward its highs from October and from August. At this stage, though, you can see that it's getting quite a little bit heavy off of this overhead resistance. We are in the bigger picture bullish the index, but we do anticipate, like the other markets, there first to be a pullback, and that pullback could very naturally drop below $52 on the downside, and maybe even find major supports down in the 49 to 50 level on the downside before we're going to be eagerly trying to buy this index again. So we'll be watching to see when and how deep the corrective pattern goes over the upcoming week or two. That was your ISE ETF and Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free ETF and index trade alerts, visit www.optionsource.net. To learn more about ISE's indexes and ETFs, visit us at www.ise.com/ETF.